All right, folks. I guess we can start now. So, good morning, everyone. Welcome to this, shall we say, preparation class for the ECB announcement and press conference. Now, as usual, we don't expect to get any action from the ECB. So, I don't expect that we will be taking any trades during the release itself. We expect that the ECB will just stay neutral, will hold off on any rate cut. Although I don't, to my view, sooner or later the ECB will be forced to cut rates again. But for the moment, the way I look at the situation, now is not the right time. If we read the comments that the ECB President Mario Draghi has been saying over the last week, it is clear that he wants the politicians to also take action. Okay, already the ECB has printed a lot of money. Back in March, I would have told you that there's enough money in the Eurozone to meet any crisis that they may encounter. But despite the LTRO programs of the ECB, despite the bond buying measures of the ECB, the Eurozone continues to face problems. We've got bank runs in Greece, and we have talks of bank runs happening in Spain, and the rest of the periphery is under threat. What has been the issue that has dominated Europe lately? How do we recapitalize the Spanish banking system? We've heard proposals about using the ESM. Now, that can happen, that can work. But I would point out that if you recapitalize the Spanish banking system, and right now the estimate for the cost of that would be something like 40 to 75 billion euros. If the money is coming out of the ESM, then that effectively reduces the ESM fund, which we know is supposed to be there to meet any attack on the debt of a European country. One proposal was that the Spanish government would issue bonds, and the bonds that it issues will be used to recapitalize its banking system. And again, that proposal has been shut down. So we are at this stage where the most urgent need is recapitalizing the banking system in Spain. And there's been various proposals on how to do it. There's even been a proposal that perhaps the ECB can come in, put some money into the banks directly. And, well, one of the things that I'd like to hear during the press conference by Mario Draghi later would be, what exactly does he think about this issue, about getting the ECB to directly participate in recapitalizing the banks? For now, the only way it seems that the Germans are agreeable in doing is first, you come up with a banking union. You come up with a framework of a banking union, and then we will discuss how fiscal authorities can come up with the funding essentially how Germany can come up with the money that would be needed to recapitalize the banks. The problem here, guys, is if the banks do not get recapitalized in Spain, that problem would probably spread. Same deal that we had before in the sovereign debt crisis for the periphery. Now it's not the sovereigns, but it's the banks. The problem, if it's the banks that are attacked, is you'll probably see bank runs, and that's not something that you do not want to see. Okay, not when you're talking about a bank run in a $1 trillion economy like Spain. So this is where we find ourselves. The need to recapitalize the banks would be a primary concern. Now, what's the role of the ECB on this? Ideally, the ECB should not have a role in recapitalizing the banks. They're supposed to be regulators. Besides, if you look at the bylaws of the ECB, they're not even supposed to be a lender of last resort. It's only by some magic financing and authority that Mario Draghi has managed to do the LTROs, which he did in December, in late February. So again, guys, as far as this rate decision is concerned, we expect no action. It is too early for the ECB to take action once more. It has been made clear by Mario Draghi's statements that he wants to see the politicians, the governments, take action first. He wants them to do their own part. And from Mario Draghi's perspective, he has been carrying the burden for quite some time already. Okay, so this scenario is no rate cut. But eventually down the road, we would expect a rate cut. Now, what if we actually do get a rate cut? What do? Are we going to get a surprise move the way we did when the RBA cut its rates? Remember, yesterday the RBA decided to cut rates, and what happened? I actually got caught on that. You had the knee-jerk sell-off, but after the knee-jerk sell-off in Aussie, your Aussie eventually rallied. So are we going to get the same thing happening in the euro? I would point out that this time around, no one is expecting a rate cut. At least none in the mainstream is expecting a rate cut. So a surprise cut to us would be textbook. A surprise cut to us would mean, let us look for a bear market, let us look for a sell-off. But as we said, we don't expect rate action. We were talking about how would an ECB participation or how would the market react to an ECB participation, an ECB presence in the banking system, in recapitalizing the banks. Let's look at the example that we have from the US. What did the markets do when the Fed forced the banks in the US to take a loan, to take money for recapitalizing? Well, the knee-jerk response from the market was, hey, this provides liquidity. This stabilizes the situation. So your equity markets went up. The dollar initially strengthened. So for me, if during the press conference, Mario Draghi does hint that yes, this is something that he would consider doing, then it may have a knee-jerk bullish impact in our euro. Although we would also have to ask, where exactly is the euro against the dollar, against cable, against the yen? I don't want to start buying something which is already hitting resistances. Now, what else would we want to know about? During the press conference, the ECB will be issuing their latest updates on their economic forecast. Now, here is where we may have or we may see problems. Earlier, we saw the Q1, the revised figures for Q1 GDP. They were mostly in line with consensus forecast. But much of the renewed problems that we've had in the Eurozone really came out last month. So what does that tell me? It tells me that there is a possibility that in the latest ECB forecast, there could be downside revisions. Remember that back in March, the ECB forecast said that they expect the economy to contract in 2012 by 0.1% only. Considering the recent data that we have been seeing, the way the manufacturing sector and even the services sector has contracted, I don't think that we're only going to get a 0.1 contraction. And that is something to watch out for. Will the ECB forecast now say that we expect a contraction of more than 0.1? Will they revise their growth forecast to minus 0.2, minus 0.3 for the year, or even lower? And if they do, what would be its impact for us? Well, again, a negative revision in the growth forecast of the ECB would have a negative impact for us. So, on the one hand, if Mario Draghi talks about, yes, we will provide funding directly to the banks, that could have a bullish impact for the currency. But on the other, if with the release of the revised forecast on where the economy is going happens, and it shows that they're expecting a contraction, they're expecting weakness, then you're going to have an excuse for looking for a bear market. All right. So, any other angle that we should be watching out for during the press conference? Well, for one, I really would like to know if the ECB would really wait and wait and wait until Angela Merkel, until the politicians decides to take action, or would there be a point where their hands will be forced and they will just move unilaterally? They will just move on their own. Because if there is such a point, we would like to know what that is. And again, if they take action unilaterally, the knee-jerk impact for us would be for some form of relief, that at least somebody is still on watch. And again, the knee-jerk response for us would be, can we get a spike up? But we do not expect it to be sustainable. The problem when it is the central bank which is providing stimulus to the economy is this. There's only one way for a central bank to provide stimulus to an economy, and that is by printing money or lowering interest rates. And both of these measures, printing money, lowering interest rates, in the end would mean that your currency should weaken. You print money, you increase supply. Simple supply and demand. Increase the supply of money, that effectively devalues money. You lower interest rate, then it makes it less attractive for people to keep money in your economic area, in your country. So there could be potential flow of funds to where people will get more returns for keeping their money there. So there could be a knee-jerk positive response, but any move by the ECB would not likely have any sustained effect on us. To me, it's a question of, are you near a strong resistance after the knee-jerk response? And if you are, what are the chances of you getting rejected? So guys, having said that, I'd like to look at the charts And if you have any questions on anything, feel free to raise it. I always welcome questions. In fact, I always welcome protest action. So, what do we have in our charts? What have we been doing? Since Friday's bad jobs data from the US, we've had your euro pushing higher. Yesterday, we found ourselves rejected from the 50-fib retracement level of your 2-week sell-off in euro. But at the moment, we've practically covered the body of yesterday's candle. At the moment, we're pushing back up again. So what do we see in our chart? I look at this and I tell myself, hey, your next strong resistance level in euro is right around 26.18. If you consider average daily ranges, average daily range suggests that euro could potentially go as high as your 25.69 area. Working rate is 25.10. So we actually have maneuvering room, maneuvering space for further gains to happen. Okay, what else do we know about our euro chart? If I look at this, my 21-day EMA is at 25.95. So I can argue that from around 25.95, 21-day EMA to my 61.8 fib retracement, I am well resisted in euro. So if there's any knee-jerk response to a Draghi statement, if Draghi says we will provide some form of bridge lending to the Spanish banking system, if Draghi says that he'll be willing to go in on his own, print money, or maybe do another LTRO without the government taking some form of action, that to us could give us a knee-jerk bounce up, and our knee-jerk bounce up would probably find itself in trouble, well resisted, by the time it gets to the 21-day EMA from 25.95 to your 26.18 region. So essentially, to me, any further spike that we get later from the euro, I would start asking, is it high enough for me to think about getting rejected? Is it high enough for me to think about, can I resume the previous bear market, the previous downtrend? Okay, technically, what are we facing in our euro? So we have a confluence of buys in our daily picture in the lower time frames. We have a confluence of buys in the 4-hour level. And in the hourlies, we actually have a bearish divergence. Your stochastic has this bearish divergence, MACD sub. We actually have a potential double top forming as well. So how do we work that into our analysis, our view of the situation? Well, let's put it this way. If there's not much talk about the ECB taking direct action or ECB providing direct funding to the bank, if there's little discussion on that issue, and there's focus on the revision of the growth forecast, and the revision will be for a sharp decline, a sharp negative adjustment, then to me, my objective would be can I get that euro to form the double top that we seem to have in the 4-hour chart in our hourly chart? Okay, so if the focus during the press conference will be on the negative revisions for the economic forecast, then let's try to get that double top going. JP, what's happening in GU? Will it continue to rise? Good question. Okay, let's just look at other charts, unless of course you guys have other stuff in mind. Again, just tell me if you have any questions on anything or you'd like me to look into something. Well, guys, GU, we're seeing a technical correction. We're actually overextended already today, but there is something that you have to consider. Remember that we've had a holiday for the Queen's Jubilee Monday, Tuesday. And during that time, we've actually seen risk appetite returning after the sell-off in equities last Friday. So I think what we have in cable right now is playing catch up after the sharp decline in Friday, after the rallies that we saw in the equity indices during the UK holiday. So this is playing catch up. Are we likely to push higher some more? Remember that whatever the announcement would be out of the ECB press conference, it doesn't have any direct bearing in your GU. So I don't think that we're going to see GU responding to the release one way or the other. But if the press conference paints a very grim picture on the forecast on what to expect next for the Eurozone economy, then I would suspect that a sell-off in equities after the release of the updates for the forecast for the Eurozone economy would probably drag your GU down as well. Okay, so GU, you're looking bullish from the dailies, yes. But when you go intraday, you're already overbought in the 4-hour chart, in the hourly level, and you're hitting fib areas. You're actually hitting the 23.60 retracement of your sell-off from, I think this was, when was this? Of your sell-off from end of April. Essentially, the whole sell-off since March. So you're well resisted at this point. You're well resisted. You have average daily ranges. To me, what we really need is a catalyst to actually trigger a pullback, if not a big reversal. So that catalyst can be a disappointing press conference, a sharply negative negative reaction to what would happen or to the press conference by your equity market. So cable, we're already overbought. We're below resistances. Let's look for a pullback, and a catalyst for the pullback could be again a disappointing press conference, a sharp negative revision in forecasted values. All right, guys. Let me get back to overview though, and let's look at the other um, euro pairs. We may have been rallying in our EUR USD through much of the day, but something that's been dropping is your euro pound. So we have 3 minutes until the release. Again, we don't expect to see any change in the ECB's interest rates. We expect it to remain at 1%, but just in case there is a rate cut, to us that's a good excuse in looking for a sell-off in your euro yen, in your EUR USD, but you may want to avoid the EUR GBP angle. So let's take a look at our EUR. Hello, Anis. Let's take a look at euro pounds for now. And I'm torn between looking at euro pound and then waiting for the release. Although again, we don't really expect anything, any action from the ECB. There is still that infinitesimal chance that Mario Draghi is fed up and he will just cut rates and ignore the German complaint. Well, I'm looking at euro pound and I realized something. We're actually below a support level. We have a confluence of bears from our hourly indicators. MACD is down, stochastics oversold, in line with the breakout. In the 4-hour picture, looks like we have dipped again in our stochastic, and we have MACDs poised to cross lower. So more excuses for a bear market turning up in our chart. So what does this mean for me? Well, guys, in case we do get a surprise cut, definitely one of my candidates for jumping short would also be your EUR GBP. We look vulnerable. We are just below a support level at the moment. Okay, we are less than a minute away from our data, folks. So let me just watch out. Let me get back to overview. Again, we do not expect to see anything new here. We do not expect to see a rate cut. And if we do get a rate cut, to us, that's an automatic, and we short your euro. We also do not expect to see any announcement since we will be seeing a press conference later. All right, guys. So what are we seeing? As expected, unchanged levels at 1%. Eventually, sometime this year, yeah, thank you, Big B, a big unchange. Eventually, sometime this year, we're going to get that rate cut, but not just now. Again, the ECB, Mario Draghi in particular, wants to see that governments are committed to reform, are committed to take action, and not just rely on the ECB to do something to fix the economy. As far as knee-jerk response is concerned, you can look at the charts yourselves. We have no knee-jerk reaction at all. So, in the end, it will all boil down to what gets said during the press conference. All right, guys. Let me just take a look at some of the other charts, and then we will review what it is that we're supposed to watch out for during the press conference. If there's anything that you'd like me to go into, you'd like me to look into before we review what to expect from the press conference, feel free to tell me about it. But for now, let me look at your euro-yen. So we've got stealth intervention by the Japanese pushing the yen pairs up. But again, stealth intervention cannot sustain a move. So I would expect that what we really need is for EUR-JPY to see some significant resistance level. And from my perspective, we've already had one. Your 99.40 region. So EUR-JPY well assisted at 99.40. Can I get a rejection from there? Sorry. Let me see this from our euro-yen profile. What do we have? Let me drag my fibs. So we're just under a moderate resistance area at around 99.28 in euro-yen. Your indicator is overbought in stochastic. It's crossing higher in your MACD. Ideally, we should actually be looking for a pullback all the way up to the 21-day EMA at 99.77. So we are about 80 pips away. For our picture, what do we have? An overbought stochastic and a rising MACD. Hourly level, a bearish divergence and a bullish MACD. What's the average range for your euro-yen? Average range in euro-yen is 123 pips. Considering today's price action, where are we with respect to average ranges? We have a low at 97.92, about 99.15. Our high is at 99.29. So we already have average daily range for EUR-JPY. Alright, we've got average daily range, we've got bearish divergence in our stochastic, we have a bullish MACD, and we are well assisted at 99.28. What do I want to see in the press conference? Again, if during the press conference it is clear that the ECB will not take action anymore until fiscal authorities take action, then to me, that would be news that would weaken your euro. What else? If during the ECB press conference, we get strong hints that, or rather, if during the release of the updates on the economic forecast, we have a huge negative adjustment on the forecast, then that can also be the reason that we need to say, hey, let's get rejected from your strong resistance at 99.28. Let's look at this as a failure to get to the 38.2 fib retracement of your down leg since mid-April. Let's use it as an argument for a resumption of the bear market. Alright guys, so Euro-Yen, we have average ranges. We are near nice resistances that should we see a sharp negative revision in the ECB's growth or economic forecast, then we would look forward to risk aversion, we would look forward to a rejection from this level. Now, where else should we be going, folks? Euro pound, we're already down. What else might be interesting for us? Well, we've already taken a look at our Euro USD. Let's take a look at other pairs. Maybe we need to take a look at your EUR NZD or EUR CAD. Well, let me take a look at the EUR AUD first. And what have we? Looks like your EUR AUD is very similar to your EUR GBP, already easing off. What else do we notice? We find ourselves with a confluence of bears. The only problem that I see here is that we are already around the low. So we don't have a lot of maneuvering room. And not unless I'm actually going to get a daily close, would I expect a big bear market. What else do we know? I'm thinking I can treat this as a potential head and shoulder. Like we actually have a head and shoulder in our daily charts. But we are, however, faced with a strong support level. So again, I doubt that we can take action in this EUR AUD chart, not unless we hear a very extremely negative revision in the Eurozone's growth forecast. But it is something to think about. Let me just take a look at the intraday charts for curiosity's sake. In 4-hour levels, we're oversold in your stochastic. We are dropping in your MACD. From the hourly picture, we also have a confluence of bears. No need to be in a hurry. We can look for shorts from just under your 2708 region. Okay, what else might be interesting? Euro Swiss is definitely not interesting. We've got that with average daily ranges of only 10 pips. But maybe we can look at EuroCAD, and then we'll review EUR USD. Okay, EuroCAD hasn't moved much today. This is nice. I always like it when we have a chart that hasn't moved much. That means there's room to maneuver. So if we somehow hear during the press conference that we have a sharp negative revision in the growth forecast, then what would we expect? I'd look for a break lower in EuroCAD. My target would be your 28.45 region at least. Indicator wise, we do look mixed in the daily picture, but we can also argue that we are in a sideways market, and we are coming from the top of that sideways market. We're coming from the highs of that sideways market. 4-hour levels, a bearish MACD in the stochastic, which is an oversold territory. Hourlies, we have MACDs flat below the signal. We have stochastic poised at a bear cross. So guys, no sense of urgency, but the nice thing about this is we can consider a straddle If during the press conference we get bad news, we get talk of a sharp negative revision in GDP forecast, then I would expect that our range play will be resolved with a bearish breakout. How about the buy side? At the moment, I'm not interested in the buy side. So if there's any trigger of the buy side on a straddle, I'd probably limit myself to just getting out of the market. So folks, a good candidate for a straddle would be your EuroCAD. Okay, hints of weak growth would certainly be would certainly pressure your EuroCAD, would certainly drag this lower. But okay, looks like we're running out of time. So let me take a final review of our EUR/USD and what's our plan. The plan remains the same. If we were to hear about negative revisions, think about where we are. We've rallied so much in euro today that we may not have the average daily range yet. We find ourselves just below the highs from Monday. We find ourselves in what could potentially be the top of a double top in your daily chart. We can always look at this as a potential double top with a stop loss above your 2542 region. If we hear that the ECB is unwilling to take action without the government, then to us that's an excuse for weakness in the euro. And if and again, an excuse to at the very least get to the trigger point of your double top. If we hear that the ECB will provide funding to the Spanish banking system, that would be a cause for a relief rally that might allow your euro pairs to spike up. But under those circumstances, we would look forward to seeing the strong resistance from your 2593 to the 2618 region, and from that level look for a rejection. Okay guys, I've run out of time, so any questions or comments or concerns? Okay, I guess there are no questions, comments, or concerns. So folks, thank you for joining, and keep a close eye on what gets said during the ECB press conference, because that will be our market mover. Hey, thanks Linda, Big B, Pavel, CK, Baltic Amber. See you next time, folks.